Hello, friends. Welcome. Friends, yesterday, that is on 16th of June, 2025, the TRAI came out with a notification. And this notification is about the broadband tariffs for PM-WANI hotspot service providers. Now, friends, you probably know that the government of India had launched a Wi-Fi hotspot program under the banner of PM-WANI, and there were huge aspirations of targets. So much so that by 2025, we were supposed to have 10 million hotspot throughout the country. The idea was that if we are going to enable those small entrepreneurs like pan wala, tea stall walas, those can sell broadband connection to their customers and earn money and become an entrepreneur and thereby enhance their own earnings as well. Now, unfortunately, this whole initiative did not take off and the numbers speaks for themselves. So let me just show you. If you go to the DOT's website and then go to PM-WANI portal, you will see that we have how many hotspot? 3,33,000. And app providers 111 and the PDO aggregators 205. Now, this number of 3.3 lakhs is much below the 10 million number which DOT had envisaged in their policy in 2018, right? So it is no way close to 10 million. And the Bharat 6G vision document speaks about a 50 million hotspot by 2030. Now, in order for the hotspot to proliferate and scale and become, a viable business model for those small entrepreneurs and thereby enhancing their income, something fundamental needs to be done, right? So DOT thought about it and they changed the license condition. Let me show you. So if you go to this document, the notification where you will go and see the first step the DOT took is to change the license condition, because earlier in the license condition, there was a reference of contractual provisions, commercial agreement. If you look at this clause, the present clause, Annexure 1A4, under the function of PDOs, it says that as per the PM-WANI framework, the PDOs will have commercial agreement with licensed TSP, and that was changed to avail internet connection, right? So DOT thought that this is not working because the amount of tariffs that these people are charging, the TSPs and the ISPs are charging to the PDOs are exorbitantly high and making the business model unviable. And that is why the initiatives were taken and the TRAI has come out with this notification to set tariffs for broadband connection being given to the PDOs, which will further enable them to sell data services and become an entrepreneur, right? Now, why I'm doing this video, friends, today? The purpose of this video is to talk about that how this notification of TRAI is a half-hearted job. It actually has not done anything. And you will, once I take you through the details of this presentation, you will find that it has actually kept the status quo. Nothing has been changed of the existing arrangement and the unviability of the PM-WANI business case. It could have done much, much more without impacting the mobile service providers, right? Business. But nothing has been done. And this whole notification is just putting the status quo, what exists now, and that has been put as a notification. TRAI itself talks about it. And it kind of contradicts in many of the, if you look at this notification, I've gone through the notification, there have been a lot of contradiction. It's a circular argument which TRAI is making. And I'm very, very dissatisfied with the job that TRAI has done. And I can tell you that what notification TRAI has come out with, PM-WANI is sure to fail. It is not going to be successful because the business model does not, carry forward, especially in small, partially dense area, maybe in areas where a lot of customers are available, there the business model may be successful. So today's presentation is to talk about why this notification has failed and what could have been done better, right? So that's the whole purpose. So this is the presentation, friends. TRI's 71st amendment, a flawed step impacting PM-WANI and India's Wi-Fi vision, right? assessing how the regulatory misstep undermine a promised public data access framework. So friends, let's go to the history of PM-WANI and DOT's vision, which I already spoke about in the beginning part of my presentation, the overview. So PM-WANI was approved by Cabinet in December 2023 to democratize broadband access, because in our country there are small players, small people, people who are not affluent. They can't afford mobile connection, these high tariffs which the mobile operators have raised, and they want the connectivity for a small duration of time to access some crucial applications which are currently available only on mobiles, right? So for them, it made a lot of sense that you have an affordable segment of activity connecting data. And now data connectivity also has become a fundamental right? Which the Supreme Court recently came out with the judgment. So it is designed as a license-free, decentralized, low-cost Wi-Fi hotspot solution. Now, this looks to me a fantastic idea. So I can give you hats off to the government, because when you make it license-free, then whatever data is sold, if there are no license fee, then there is no double counting. Revenue share is not charged from these players. So there is not, just like the current, the tower business is concerned, right? So here there is no license fee. So you can see sharing of tower has taken place, because there is no double counting of revenues of the tower companies and the mobile operator. Similarly, there will be no double counting. So license free was a very, very significant and bad step which the government of India had taken. Then the NDCP target talked about 10 million Wi-Fi connection by 2022, not 2025. We now in 2025, we are actually at 3.3 lakhs only. It says insignificant. So DOT, MIT jointly wanted to promote PM-WANI was using all CSCs, RailTel and CDOT, and India 6G document talks about in 2030, 50 million hotspot, and therefore it is important to take, for the TRI had to have taken some decisive step to trigger this whole business model to such a way that it becomes viable and the PDOs are motivated to grow their business, and this hotspot scales up to the level of expectation and the policy targets of the government, right? Now, if you look at the TRAI's tariff order and contradiction and policy inconsistency. Now, in this chart, you will be able to understand what is going on. TRAI permitted the TSPs to charge PM-WANI to the PDOs at 2 times the retail broadband price. Now, friends, this is little bit, funny. Let me tell you, I find it very amusing. The reason I am finding it is amusing is that if you look at the document which the TRAI had come out with, which is the 71st Amendment, there is a mention of DOT, Department of Telecommunication, finding the broadband connectivity much more costly. If you see, point number 11, as compared with the 100 Mbps internet lease line versus the tariff of 100 Mbps FTTH broadband connection, shows that the annual tariff of internet lease line are 40 to 80 times than the retail connections. PDOs, specifically the small PDOs versus small establishments, small retailer, chaiwalas, kinarwalas, shopkeepers, etc., are actually have to have, with a low revenue potential, neither need an LLL connection nor they can afford high backhaul rates. So they are, because it was under contract, it was not a publicized tariff by TRAI. So because it was under contract, the likelihood of having a contractual arrangement between the PM-WANI providers with the mobile operators can be at a higher rate, because mobile operators will not like their business to get cannibalized, right? So that's why this number has been quoted. Now, if you go down below, the logic that TRAI used to make it 2 times is because they are saying that the existing rates which are being offered to the PM-WANI PDOs by the mobile operators are already at 2 times. You see, PM-WANI plan, 100 Mbps PM-WANI plan, retail broadband FTTH plan, this is the 706.82, this ratio is 2.17, and the 50 Mbps plan is 2. So when they are already, so if you read this, you'll find that in order to determine the tariff framework for PM-WANI, authority analyzed the tariff presently offered to PDOs, the capacity of these PM-WANI plans and their comparison with the retail broadband. Authority knows that the service provider are already offering broadband plan for PM-WANI. A comparison with their 50 Mbps and a 100 Mbps plan is as below, which is twice. So if they're already offering 2 times, then if TRAI now says that it should be 2 times maximum, what is that TRAI has done better? They have actually done nothing, because if this is already being offered, which is mentioned here, and DOT is saying it is 80 to 100 times, and then there are many allegations saying that the business is not successful. So if the business is not successful, PM-WANI is not scaling, then offering a plan or making a regulation, which is the current framework of tariff, which is already offered by the telecom service provider and the retail and the ISPs, what better TRAI has done? TRAI has not done anything, right? You only made these as a reference rate that you can't charge beyond. Nobody was charging beyond. If this is what the fact is, point number 43, right? So if there is nobody is charging then, and you put a maximum that which nobody charges, what better you have done? So with this tariff plan, which TRAI has come out with, nothing is going to change. There will be no scaling up of PM-WANI WhatsApp. Their business case is not going to become viable, because this is what TRAI is saying. They're charging and they have just kept it 2 times, right? So TRAI justifying higher rates, saying TSP already offers such prices, is a circular, flawed argument. It makes no sense to me. So TRAI failed to conduct any business case viability analysis. If you look at this document, you will find TRAI has not done any business case analysis to figure out that you should have called the PM-WANI people and asked them what is their business like, what kind of tariffs that they are getting, how many customers they have. I have not seen a single business case analysis in this document. There should have been some 10 sample cases for different types of PDOs and those in the panwalas. So that's to understand what kind of problems that they are facing. Nothing was done, right? It's a very, very loose and you can say, mediocre work which TRAI has done, right? So PM-WANI business case viability channel. So if you look at typically PM-WANI PDOs monthly usage as per TRAI is around 300 GB, which is less than typical FTTH user, which they can use 400 GB, somebody 500, 600. And then there is a cap of 1 terabits, which is the FUP, right? Now, in retail FTTH, 50 to 100 Mbps price, which you've already seen in the document which I showed you, it is 2.2 into 2 times higher. Revenue of PM-WANI, assume that they are charging 5 to 10 rupees user per day, 30 users will come out to be around 6,000 to 4,000 to 6,000 rupees, not more than that. Now, if they take platform fees high, and if you have to pay this 800 rupees or 700 rupees or 1,500 rupees per month, right, which I showed you here, if this is what you have to pay, right, then you multiply this by 12, 1532 multiplied by 12. You are already, you already basically have, of 18,000 rupees. So these are all monthly plans, right? So if you have a monthly plan like this and you have to pay, if it is going to be twice, let's take the 50 Mbps plan. Let's assume 1,000 rupees, still 12,000 rupees. So if there is a 12,000 rupees backhaul, charges, then how can this revenue, this business case of 4,000 to 6,000 rupees will become viable? So this is what the work that TRAI should have done, right? So there is no way these broadband charges or tariffs which TRAI has said is going to become a viable. I really do not know. When the consultation was going on, then also I read everything. There was no business case analysis done. So this will lead to poor participation with high dropout and negligible scale beyond pilots. So what TRAI should have done? This is pretty important. What TRAI should have done instead than setting up the rates as 2 times the retail plans, right? Now you know that TRAI mentions that the usage of PM-WANI, business users who are using PM-WANI broadband connection, they tend to use lower compared to retail users. And I think it is written there somewhere, which I saw, and I'm going to point out where it is. It is lower than So if you look at, there is, I don't think, I can't find it. Where it is anyway. So if you look at this particular document, you will find in this one place in this document, TRAI mentions that the usage of PM-WANI PDOs are comparatively lower compared to FTTH, right? So they are not using at the level of FTTH, who are using much higher. So PM-WANI what they could have done is they could have made the usage as a benchmark. Let's say if a PDO is using, let's say, 300 GB and an average retail is using 400 GB. So if he's using 300 GB, then its plan compared to the retail plan should be 75%, not 2 times of the retail plan, because he's not using. And TRAI also mentions in this document that it is not a threat to the FTTH connection because the number of PM-WANI hotspot or the PDOs is a fraction of the total 40 million FTTH or the broadband subscribers, which the retail broadband subscribers is already present in the market. So there is no way there was a threat. Only threat was of the mobile data top up. Now, mobile data top up, if you go to Reliance Jio's website and you see the prepaid plan, we have 145 rupees 1 day unlimited data, right? Then we have got rupees 19 1 day 1 GB. Then we have rupees 11 1 hour unlimited data. So these are the reference point which will become the point of consideration on which the PDOs will charge their customers, right? That's how it is. So if they are going to charge less, so these kind of connections are going to become much more viable. So the benchmark should be not the FTTH, but the mobile customer data top-up plans. That should have been the reference point for comparison, which TRAI fails to do because TRAI says that there is not going to be any impact because FTTH is 40 million and PM-WANI is hardly 3.3 lakhs, right? So it does not matter. So if somebody is offering any services to the customers and those services are extremely lucrative compared to the mobile top-up plans and provides a granularity of usage which is lower, then people will be much more gravitated towards using those plans, and that is exactly what the business model should have been, right? And if you put a cap on the usage, means that you can't use more than 300 GB. Because when you are comparing with retail plan, you have got an 400 GB or 500 GB average users with a FUP of 1 terabyte. So if you cap it, then you can actually provision the PM-WANI plan as per the retail plan or even cheaper. That should have been the approach. And then to prevent mobile operators getting impacted, there could have been a viability gap funding by the USO, right? To those people that, to mobile operators to ensure that their business model as far as mobile is concerned is not getting impacted, right? So if you are not going to enable a viable business case, then what is this point about Bharat 6G vision of 50 million hotspot and all those documents that we have and all this effort that TRAI has done by making it 2 times? As you saw, that if somebody is earning only 6,000 rupees, how can you pay 12,000 rupees even at the 100,000 rupees retail broadband connection? How can that business case be viable? It makes no sense. So TRAI should have reduced the price of the broadband connection to the PM-WANI by proportion to the usage compared to a normal FTTH users. If 75% means the plan should be 75% of the retail user. And if there was a problem with the mobile operator facing, as far as mobile tariff is concerned, that should be replenished by using a viability gap funding. That would have been a much better approach. Right, friends? So PM-WANI is a missed opportunity due to regulatory oversight. TRAI failed to align with the DOT's vision and targets set under the NDCP, and the 6G strategy document of 60 million hotspot is not going to happen, friends. Let me tell you, TRAI has done nothing. Instead of promoting affordable data, TRAI safeguard the mobile operators ARPU, right? And without even analyzing the business case, no professional evaluation of why PM-WANI has failed, relying on only anecdotal tariff logic. Hotspot rollover, user adoption, PDO participation remains negligible. DOT's vision for digital inclusion through Wi-Fi remains unfulfilled on the ground. And let me tell you, friend, this is not going to help. Because whatever was the fanfare which the government of India has launched, if you don't have a viable business case, you don't enable these people. And without having any impact on the mobile operators' ability to run a profitable business, you are not enabling the PM-WANI. So conclusion is reclaiming the promise of PM-WANI. PM-WANI remains a powerful idea with potential to democratize access to data. Its failure is largely due to misaligned tariff and lack of support mechanism. The completely, regulatory bankruptcy. I do not know what framework TRAI has used to, make it 2 times the retail. There is no, because this is already there, what TRAI said. It can just put a cap there if whatever is being offered, which TRAI is writing in their document. TRI must revisit this framework with a business viability lens and align with the national digital goal. DOT should enforce corrective action through targeted subsidy, performance link incentive, and rational pricing. India can't afford to lose low-cost public Wi-Fi system when mobile data or mobile business is consolidating and will soon become a duopoly if Vodafone Idea collapses. So it is important that India has an alternative framework for those people who can't afford tariff hikes, in future tariff hikes. And that could be very easily done by enabling a proper business model which can self-sustain and offer data at a much lower granularity, at a much lower price, so that people can have an option to access internet for all kind of digital inclusion packages or programs which Government of India has launched. That's all I wanted to say, friends. I'm very disappointed with what TRI has done. And thanks for listening till the end. And I'll come back with a new video on a new topic next time. Thank you very much, friends.